Hi there, Serial Trader here. Just going to look at the major US indices and do an update from the last video. And in the last video I mentioned that looking at SPX here on the hourly chart, we basically had to turn down immediately to keep any kind of bearish potential intact. Well, we actually did. We turned right down from that point where it would have basically almost ensured that we were going up to new all-time highs again, which would have been breaking above that 39.30, 41 level. We got as high as 39.2865. So held on by a thread, but we did actually end up turning down and getting a pretty nice move down there on Friday. Now, there's still conflict between the indices. So it's really still not a high conviction environment as to whether we're really going to roll over here or turn back up for new highs. But I think at least in the short term, some sort of more sizable bounce up seems likely, and I'll go through why I'm thinking that. Now here's kind of the bullish interpretation, which is still valid, and I'll show where it becomes invalid, which is important. A lot of times you have multiple possibilities, but eventually there's kind of a process of elimination where one becomes very likely or dominant. Right now we haven't eliminated enough to be confident in a in a direction, right? So in this bullish scenario, we've just done from this previous fourth wave low of 36.94. We've done this 5-wave sequence up for just an initial wave 1 of a still developing 5-wave sequence for potentially that larger 5 of 3. Now in this scenario, we got a 1, 2, 3, 4, 5. I've modified this a little bit, but it still works as an expanding leading diagonal wave A. We had this ABC up for a wave B, and then 1, 2, 3, 4, 5 waves down to finish wave C, a potentially a larger wave 2. And then that would indicate that we're going to be heading up here in that third wave, possibly up to that 4,200 area if we get a 1.618 relationship between 1 and 3, something like that, right? So this is still very much alive, this scenario. And I'll also remark that, okay, so the overall retracement of this 5-wave sequence up from that 36.94 low, we came down, just hit that 61.8% retracement. Actually kind of went into that golden zone, as it's called, that area between the 618 and the 65% retracement. So far, a nice reversal, or at least reaction off that golden zone. So that might be it. I'll also mention that so far it is contained nicely within a parallel trend channel. Okay, so as long as we stay within this channel and ideally hold above Friday's lows, then we might be, just about to start a third wave to the upside, which will be, hundreds of SPX points. So that's pretty bullish if that happens, and that's certainly very much intact. To me, the bullish scenario really dies, or at least gets greatly postponed, if we take out this low, this 36.94, because that could no longer be considered an internal retracement of this 5-wave sequence off that low, and then we're probably working something on a larger degree as far as a decline and more downside. But that would be kind of the key level for the bulls to hold. And I'll also remark, if we go out to, say, a 4-hour chart, ever since we've had this move off the pre-election lows there from the October low, basically every swing down we've had is a higher low. Higher low, higher low, higher low. I can go on, I don't have to keep saying it, higher low, and then so far another higher low. So this would be a lower low, finally, after a series of higher lows, if we do take out that 36.94.12. Again, anything above that, really, the bullish scenario here, as it's illustrated, is certainly intact. And more ideally, if we hold this 618% retracement level and this reaction off it, if that really is the bottom, then that looks pretty bullish to me. If, keyword if. Now, again, I have to show the Nasdaq because there's still a conflict. So the Nasdaq, we've essentially done a completed 5-wave or potentially completed 5-wave sequence down. So that suggests more downside after a corrective bounce. But the fact that we have a mature looking 5-wave move down in the Nasdaq, that would still suggest that we have a more sizable corrective retracement, and it could be a pretty deep retracement. So even on the short term, using the Nasdaq, despite implying eventually going down more after a bounce up, we still are looking for some sort of at least short-term upside here in the Nasdaq. And I've just shown some retracement levels. You could easily come up here, do a 61.8% retracement, or even fill this gap, or whatever, right? So that's kind of the conflict with the Nasdaq. It looks a lot different from the high than the S&P 500 does. And you might say, well, this doesn't actually quite look like the fifth wave's in place because we didn't quite take out the low. It's a truncated fifth wave. Well, on the cash index, it's a truncated fifth on the Nasdaq 100. But if you go to the NQ, so the Nasdaq 100 futures, overnight we did make a lower low. So we do have a nice completed 5-wave sequence here in the futures. So I wouldn't really call it a truncation on the cash index when the futures did actually make that move. It just wasn't observed in the cash session. That's perfectly acceptable. So Nasdaq suggesting, even though maybe a little more bearish overall, as in we do have to do a 5, at least 3, and then another 5 down, we're still going to need that 3-wave move up to retrace this 5-wave sequence down. So even in the more bearish looking indices, we're still looking for some short-term upside, I would say. Now on the Dow Jones Industrial Average, different altogether. So I mean, the Dow made a new high at a way different point in time than the NDX, or I should say than the Nasdaq or the S&P did. So a big divergence there between the Dow and the other two indices. So the Dow was showing some relative strength against the other indices. But now, if I look at, say, a 30-minute chart on the Dow, looks like we've started a fairly impulsive-looking decline, and maybe we got a fifth wave move in place for initial 5 down, or maybe we've got to go a little further down here, since we did close pretty weakly there on Friday. One more little spike down to complete 5 down, perhaps. But then we would still be looking for some sort of 3-wave corrective bounce on the Dow here, and then roll over for another 5-wave decline, perhaps, okay? So definitely some divergences between the indices, Dow, NDX, and S&P. They really don't look the same. Often they look almost identical. Right now they don't. So there is some conflict there. Now, going back to the S&P, so I showed you the bullish interpretation, which certainly is intact until if and when we take out that 36.94 level. Now here's the more bearish scenario, which I guess would be perhaps more in line with the other two indices, and that's where we have a very unusual but still acceptable 1, 2, leading diagonal 1, then a bounce up in 2, and then a 1, 2, and now we're working 3, 4, 5 of 3, and then 4, 5. So this is actually a pretty bearish scenario. Obviously, if this pans out, we are going to go down and take out that 36.94 and have some sort of more substantial downtrend established. I'm not that supportive of this interpretation. This is a pretty fancy wave count. Valid, but a little fancy for my taste. Usually when you get too fancy, it's probably wrong. Not always, but the more rare a pattern or a series is, the less likely it is to actually be the case, from my experience. But just thought I'd show it. This is the bearish scenario should it play out, and certainly nothing to invalidate it yet. And in fact, I would say the only thing to invalidate this would be confirmation of getting above this level here. So that would be that 36.20. Let's call it the 36.30 area here. A clean break above that, and I think we are heading up to that, 4,000 plus, 4,200. Take your pick for targets, but new highs, right? Now that I've gone through those different scenarios, let's head over to the think of some candlestick charts. So daily candles here on SPX. We are sitting right around that 50-day simple moving average. Violated it intraday, but basically closed right on it. Not quite oversold yet in our oscillator. But, I mean, as long as that kind of 50-day moving average area holds, just like it did back here, that could just be a pullback and heading higher again, just like I mentioned in that, bullish wave count. But we'll have to see. Again, I'd say if we start really closing below that 50 and obviously break below this prior swing low at 36.94.12, then we got something more substantial. Maybe a trip down just by using moving averages. Maybe a trip down to visit the 200-day simple moving average or something like that. But, I'm not convinced yet. We got to actually confirm there's something more bearish going on here. Still needing confirmation. Weekly candle. Okay, so this wasn't a very strong reversal candle last week. I mean, it was a dark cloud cover candle, so it was a legitimate reversal. And we have actually had some downside follow through, so I guess you could say that's confirmed. And we've closed below the weekly T-line, so a bit of a breakdown here on the weekly. But again, as long as we're still above these two swing lows down here, these weekly lows, I think this one would be the more important one, that 36.94.12. This could just be another pullback on the weekly and higher again. Okay, SPX. Let's go to Dow Jones Industrial Average. So the Dow looks pretty menacing. Two big red body candles. This wasn't quite a bearish engulfing. It didn't quite open high enough, but very close to a bearish engulfing candle. Certainly had the look and feel of a bearish engulfing, and then obviously some strong follow through. We are getting close to that 50-day simple moving average on the Dow, so that could be a potential bounce area if we don't actually hold the lows from Friday. And again, this could just be another higher low when there's still developing uptrend, as long as we hold this level on the Dow, which would be 29,856.3, that prior swing low. Weekly chart. Pretty ugly looking weekly reversal candle here. I guess you could call this a big inverted hammer on the Dow. So that looks a little scary on the weekly, but if it just reverses, and goes up and makes new highs, obviously that invalidates the reversal candle. We've certainly seen that before. Okay, that's good enough for the Dow, and we'll go over to the Nasdaq Composite. And on the Nasdaq Composite, we do have a little downtrend in development here. Again, looks a little more bearish on the short-term wave count than the S&P. We are below the 50-day simple moving average now. We've closed below it for a couple days in a row. And the 200-day simple moving average would be pretty far down here at 11,500 or so. Let's see, currently 11,516. So that'd be quite the trip on the Nasdaq if we go down to the 200. I'm not so certain that's going to happen, but it's possible. Now look at the Nasdaq's prior swing low back here compared with the other indices. So this was at 12,985.05. Gone as low so far as 13,003.98. So very close to finally making a lower low on the overall trend here instead of a higher low. But so far, just by a thread, we've got a higher low in place. Weekly candle. So the Nasdaq actually did have a pretty legitimate reversal candle last week, and that was a bearish engulfing the prior week's real body. We obviously had follow through this week, closed below the weekly T-line. So Nasdaq really does look the most promising for more downside, and if it does follow through, I have a difficult time believing that the S&P can go and make up go up in a wave 3 and make new highs if the Nasdaq's really breaking down and making lower lows. So there's a conflict here. It's not a high confidence situation at the moment until something really confirms. Okay, on the VIX. So VIX has certainly come to life a bit here, but again, we're not even spiking up to this prior level that we spiked up to before. That was at 37.51. So far we've gone as high as 31.16. So as long as VIX doesn't get too excited here, then I have my doubts about the downside potential. But certainly worth watching. VIX, we could be here now, and then next week we could be exploding higher. But right now, VIX is not really showing its hand. A little bit of action, but not the explosion you would look for in a real large degree decline yet. Okay, VIX VVIX tool. We are on a sell signal once again. So here we had a little VIX VVIX divergence. VIX made higher lows, VVIX made lower lows, and then VVIX got back above the red moving average. SPX again broke below the blue moving average. So we're on a sell signal currently on the tool, just for what it's worth. Again, get back above the blue moving average on SPX, and have VIX and VVIX start pulling back in, and then we're back to a neutral to bullish situation again here. Okay, that's really all I wanted to go through. So I would say for the bearish scenario, really take hold on SPX, just using SPX as the barometer here. We got to get below this prior swing low at 36.94.12. Anything above that is still potentially an internal retracement, as shown on this bullish SPX wave interpretation. You can see again we had the 618 retracement act as a nice reaction level. You could easily still come down though and grind a little lower to the 786 or even below the 786. Again, as long as you hold above that 36.94, this can be considered an internal retracement, a wave 2 from the wave 1 as it's labeled here. That's still valid. So that's really the key level for the bulls to hold. Sorry, for the bulls to hold. And I'd say good confirmation, get it back above that 39.30 level. Get cleanly above 39.30, and I'd say the bull scenario is in force. So those are the levels to watch. Definitely a conflict between all the indices now. So that adds to the uncertainty. If I was just looking at SPX, I think I'd be leaning more towards the bullish side with a higher confidence level. But given the NDX has done 5 waves down, but currently looks like it's, again, short term, even the NDX, despite being more bearish, doing 5 waves down, still looks like it wants to do 3 waves up now. So early next week, I would say is likely still going to be bullish. Some upside opportunity, at least short term. And again, on the Dow is different altogether. Made its high at a very different point than the other two indices, but now it looks like it's starting its own 5-wave decline. So big time conflict there between those 3 indices. So early next week, despite all this, I still favor some short-term bullish action, but then I'm not so sure if we actually continue up and make new highs or kind of peter out and roll over for lower lows. So we'll have to see what happens next week. That's what I'm seeing currently. And certainly check in as some more action develops. All right, Serial Trader signing off.